And welcome to this weekly edition of your GoNoGo show here on April 6th, 2023. Alex Cole, my good friend, how are you?
I'm doing well, thanks. How are you?
Doing very well. Gearing up for the 50th anniversary CMT symposium. Looking forward to seeing all of our StockCharts friends there, and for all of you who are in the New York City area, come check that out as well. Alex, it's been a little bit of a heavy week in the markets. We broke our up streak, but let's check on the trend perspective and just see what GoNoGo charts are telling us. Let's start with our cross asset heat map from that top down perspective to get a sense of what the overall market performance is looking like.
Yeah, and just to say, Tyler, the speaker lineup for that symposium at the end of the month, absolutely fantastic. So awesome. Can't wait for that. But yeah, this is the asset map. We are seeing that, yes, we've pulled back a little bit over the last few days, but we are definitely still in that new go trend on equities. You can see strong blue bars on the first panel. Treasury bond prices still in a strong blue go trend as well, meaning that due to the inverse relationship of prices with rates, we're in a no-go for Treasury rates. We'll take a look at that in a minute. Commodities have started to turn, which is exciting, and the dollar still, of course, in a no-go as well.
Absolutely. And let's switch over to just a plain old chart of the S&P 500. Yeah. Taking a look on a daily basis first for what we could see from a trend perspective.
Yeah. So we're starting to see higher highs and higher lows. I mean, Tyler, that's technical analysis basics, right? So we put in another higher low. Barely, and then we can see how the oscillator going below zero and then coming back above zero out of this max go no go squeeze has triggered this return to a go trend. Now we're going to watch to see if we can get above these prior highs and set another higher high. So we haven't seen a go trend take off in the way that we would like. We've seen some go moves that have been countered by some no go corrections. So these go trends as of yet haven't transpired into big trends, but we've sort of seen them break even as a return to downward pressure has taken over and some no-go corrections. But we're going to try again, back into go trend, strong blue go bars, and the oscillator broken out of that max go no-go squeeze and in positive territory.
When we recorded that special for StockCharts TV around embracing volatility, the big lesson for us is that when you can spot those areas of tightening, the tug of war between buyers and sellers, when you have a volatility squeeze as identified by the GoNoGo squeeze, it can mean one of two things: either a trend continuation, right, where there's a bit of indecision and we resume the underlying trend, or a trend reversal. And so in this example that we're looking at on screen right now, we saw that the GoNoGo squeeze was an important signal in terms of the direction of the break, that we had been in negative territory, came back to neutral. We were sustained at neutral as the range of price action tightened up. And then when the bulls took over, everybody piles into that side of the trade. And this is on a daily chart. Let's just keep our time frames in mind. Alex, if we switch out to a weekly chart, we can see that we're getting some confirmation across multiple time frames for this new go trend in US equities.
Yeah, this is the third week now in a row, unlikely to close in anything other than a go bar. I mean, unless we fall off the cliff tomorrow, but we're going to be painting another go color. It does look like a bit of a doji, so there's some pause here. There's some contemplation by the markets, but we've found support now for the third or fourth time at the zero line on the longer time frame chart as well. Broken out of that smaller squeeze with heavy volume. The dark blue of the oscillator tells us that volume is heavier than average. And so we're in positive territory, breaking out of that squeeze, go colors on the trend indicator, and we're looking to get above those prior highs on the weekly chart.
Absolutely. Well, let's switch over to some of our global macro charts just to get a sense of what's impacting equity markets. Let's start with the TNX. You mentioned T-bill, sovereign bond buying is certainly helpful in reversing that upward trend for yield or rates. So when we look at the TNX on a daily basis, we're in a no-go, and we've got negative momentum from the GoNoGo oscillator. This is obviously the weekly chart. Let's take a look at the daily.
Yeah, absolutely. But that's interesting. We'll flip right back to that weekly chart because it's very interesting that now we're getting those trends lining up on multiple timeframes. Hasn't happened on the Treasury rates for a while. We've been in that longer term rising rate environment on the weekly chart. So we're in a no-go. We can see that we've actually crept lower below the support level, which we've been looking at. We noted, I think, last week how we'd rallied from intraday lows below support right back up. You can see that here. If you can see my cursor, we rallied right back up to the support level, and then we moved higher. Well, we've fallen through it this time. We've had a couple of closes below these levels that have been acting as support. GoNoGo oscillator been turned away from the zero line. So NoGo trend fully in place on the daily chart. And if we flip that back out to the weekly, you can see that that's caused the weekly to paint a first NoGo bar since over a year ago, really, since the fall of 2022. So we are looking at a no-go on the weekly chart as well as it creeps below those support levels that we saw on the daily.
Yeah, on a weekly basis since the fall of 2021, right?
Right.
So last year, the 2022 bear market, a consistently rising interest rate environment.
Right.
And what the signal here is that not necessarily reverting back to much lower interest rates, but certainly not moving meaningfully higher in a no-go trend. You know, it's a funny thing about go trends or no-go trends. You don't tend to see new highs in no-go trends, right, Alex?
That's not very likely. Not very likely. Show me a chart.
Show me a chart that makes new highs in a downtrend. So helpful, certainly, tailwinds for equities and risk assets broadly. Let's switch over to a chart of the US dollar. UUP is the ETF we use as a proxy for the dollar index, giving us some volume information on how that's trading. Also rolled over from prior strength here in February and March. On the daily basis, certainly not oversold, but consistently negative momentum and in a strong no-go trend.
Yeah.
Go ahead.
No, I was just going to say that we're starting to, if you follow technical analysis, you follow GoNoGo charts, you start to recognize these patterns. And this is, we talked about relief rallies throughout 2022 on the S&P. And this is a no-go trend in the dollar. And then we saw it break back to go colors, which look like at the moment a bit of a relief rally. We've returned to no-go bars and the oscillators below zero. And there's a little bit of support down here, but right now we're in a no-go trend. But the reason we can talk about that as a bit of a relief rally is because on the weekly chart, we've been in a no-go trend since the beginning of the year. And we saw that rally that we saw on the daily chart, which was not enough to push the weekly chart out of amber go fish bars, turned back to a no-go, and now we're riding the zero line, testing it from below in a max go-no-go squeeze. So this is going to be very interesting to see if we continue in this no-go moving lower, if we can break that squeeze into the downside. So treasury rates lining up now on weekly charts with the daily. We saw the no-go on both of those. The dollar rolled back over on the daily, which stays in line with what we're seeing on the weekly. So these two macro factors that certainly can impact equity prices, we're starting to see a picture emerge.
Absolutely. And, for all of the currency traders that are out there, we know, when you're talking about the US dollar, are you talking dollar yen? Are you talking dollar euro, dollar sterling? There's a lot of nuance and a lot more understanding that you can get out of go-no-go trends on those individual pairs. But when we're looking at this sort of at the index level, that max squeeze is an important sign to us that if we were to break lower out of that max squeeze and have some continued negative momentum within this no-go trend, that would be a sign for higher velocity moves to the downside. So let's switch over to the chart of gold and take a look at sort of the corollary to the US dollar, where we have seen strength.
Yeah.
Right? We see these inverse correlations pretty consistent throughout history. And last week, I was at the GAME conference, Global Asset Management and Education, 3,000 university students, a lot of professors who were very keen to hear from both Jim Bianco and Urian Timmer. And in my conversation with Jim and Urian, both of them talked about, in terms of global asset allocation, that gold might be a important asset to hold in a lot of portfolios here through the year ahead. They're seeing a lot of constructive evidence for gold's performance longer term. Remember, these are macro strategists at the highest level of their game. What we can use is GoNoGo charts to tell us that indeed gold is in a go trend got positive momentum, found support at 0, and we see that trend continuation icon there just a couple days ago. From this point, Alex, I see volume picking up, right? The GoNoGo oscillator turning from green to that dark blue. Where would we be looking for overhead resistance, additional supply? If we back this out to maybe a weekly chart, we might be able to see those prior highs where we'll be running into some resistance.
Yeah, I went back to a monthly chart because of I remember looking at this and seeing how almost exactly these two highs lined up. So we've got a little bit of room above, but certainly this could act as some resistance at these levels. But if this push higher that people are talking about on a sort of a longer time frame, if we back it all the way out, people have been talking about a cup and handle on gold over the decade kind of look. We could be looking to break above this horizontal level of support. But that's where I would see the immediate resistance, right around on this GLD chart, right around 192. So if we look at that daily, you can see we've still got a little bit of room to go, but there could be some resistance coming from those highs.
Certainly, but those new closing highs on strong go bars, certainly a sign for the gold bugs and the bulls of gold.
Yep.
That there's some strength remaining in this trend. Alex, let's switch over to US oil. Just take a look at the energy space here for a minute.
Yeah, big pop this week in oil. I was on the Traders Workshop podcast with Ninja Trader and Tom Schneider, our good friend over there, and we were talking about the pop on oil that we'd seen gapping higher, and we brought up this longer time frame chart though to take a look to see if it had broken the larger trend. Not yet. You can still quite clearly see that this downward sloping trend line is in place. We are right at the highs of that trend line. And the GoNoGo oscillator testing the 0 line again from below. And look how many times that 0 line has held. So we are in a no-go trend. We clearly have painted a weaker pink aqua bar this week because of that pop we saw a couple of days ago. And we are at the highs of this downward sloping trend line. But if this no-go trend continues, you could even be looking at this as a selling opportunity, right, to fade that move, especially if we see this 0 line continue to hold. I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times we've held the 0 line. So that's very, very important level. We'll look to see if it gets rejected again, or if this is the time where we can break above resistance and break into positive territory and perhaps see a return to a go trend.
Absolutely. Classical technical analysis, being able to spot trend lines, really important part of how we were brought up, the education we received from CMT Association and all the great members there. But you need to have a clean chart to be able to put those annotations on and see price levels very clearly. Alex, just as we're doing the round robin, let's pull up the crypto rel map. We try to check in every so often on how the digital asset space is performing. We'll have Glenn Williams at the CMT Symposium in a few weeks from CoinDesk talking about the institutional appetite for digital assets. And sure enough, I see a lot of aqua and blue, Alex.
Yeah, we talked maybe 2 or 3 weeks ago about how the relative outperformance was coming from the major currencies, Bitcoin and Ethereum. Well, we're sort of across the board now. This is just a small sampling of cryptocurrencies. We are by no means saying these are the only 4 you should look at, and we can build out maps of 10 to 15 of the top cryptos by market cap. But I believe at the time I created these were the top 4, Cardano and Ripple as well in here. And now all 4 of them outperforming the S&P on a relative basis. So this is a rel map of these cryptocurrencies to the S&P. And you can see how the go trend in Bitcoin and Ethereum has persisted and turned to strong go bars as well.
Beautiful, beautiful. Let's turn our eye back to the equity space. Let's get under the hood. After all, it is a market of stocks, not a stock market. Let's take a look at a GoNoGo rel map of the sector groups. And this is every sector of the S&P 500 relative to the benchmark index. So just the ratio of the sectors to the S&P 500. And we're looking at those trends of relative outperformance to start to see where we might look for tactical asset allocation opportunities or idea generation. Turns out if you want to beat the benchmark, you got to own securities that are beating the benchmark. So it looks fairly consistent, Alex, over the last few weeks. We're seeing sort of a barbell approach of this market in this rally, where the growth equity sectors, technology and communications outperforming. A little stubborn no-go trend there for consumer discretionaries. But we're also seeing the defensive areas of the market, consumer staples, and now even utilities beginning to outperform. What do you make of that?
Well, I've talked to quite a few people about that, and I know that people were very excited to see technology, the growth sectors, really starting to outperform. What we want, though, is broad outperformance, and I think it's a bit of a conflicted market, to be honest. We try not to give opinions, and we try not to, we know our sayings. We don't predict, we react responsibly. But when you see defensive sectors lead, to me, that's showing me a little bit of uncertainty. But certainly more sectors outperforming now than there were a couple of weeks ago. It was just those two. So you can sort of take that either as a positive or as a bit of a sort of contradictory information, where you've got defensive sectors leading as well as these more risky growth sectors. So it's an interesting conversation for sure.
Absolutely. And I think the contrarian view, as technicians often hold, is pretty complicated right now. The market is, investors are bracing for what might be a potential recession, as identified, usually after the fact, and so positioning towards more defensive sectors, even starting to see that neutral performance in the healthcare groups. That is not surprising, and yet we also saw that the technology and communication sectors were some of the most beaten down through the bear market of 2022 and had the most to regain. So, in terms of folks who were looking for a good value, finding some technology and communication stocks that were heavily discounted after last year's trading activity certainly makes sense. Alex,
I think, Tyler, to your point, it just sort of says that it's hard to decide, where we're going. When we looked at our macro factors just now, you're seeing some information coming from things like treasury rates and the dollar that might suggest a little bit of a relief for stocks. But then at the same time, gold is doing what it's doing as a potential flight to safety. So, certainly that's why you want to look at charts and see where the trends are, because you can still capitalize whichever way we're going.
Absolutely. So let's dive into the industry subgroups of the staples, consumer staples sector. So this is our top-down approach. We start at the asset class level. We're going to look to the sector groups, and then we want to get inside the sector groups to see what is leading within that space. And right now, the two areas of the consumer staples that are leading are non-durable household goods, right? So toilet paper, paper towels, you name it, and soft drinks.
That's right.
Believe it or not. So we're not fundamental analysts. I couldn't tell you exactly what the fundamental reasons or intrinsic value estimates of companies like Coca-Cola look like, but we can see as technicians that those are outperforming in an industry group that are outperforming the sector group, which is outperforming the index. And so when we layer all of that on our side, we're putting probabilities to our advantage. So let's take a look at a couple of non-durable consumer goods companies. Why don't we pull up Sysco? Not the computer Sysco, the toilet paper Sysco.
Toilet paper versus tech, right? That's one of our favorite risk on, risk off ratios to measure. But yeah, Sysco, SYY is the ticker. And you can see that relative outperformance starting to be picked up by a security within that subgroup. So this is a nice looking chart from a technical perspective. We're seeing potential, a break in this downward sloping trend line that's coming on, changing GoNoGo trend colors as the oscillator has broken above the zero line into positive territory. So we're seeing this. We're seeing the technicals line up to suggest a move higher, which is now represented by GoNoGo trend painting stronger blue go bars.
Brilliant. And let's also take a look at a soft drink company. Why don't we pull up a chart of Coca-Cola?
Yep, good old Coca-Cola. Coca-Cola we featured actually a couple of weeks ago because we noticed that relative outperformance in the soft drink subgroup, and then we saw the Go trend emerge in Coca-Cola. I think it was in here somewhere. We saw the weaker aqua bars first, and then we saw this interesting test of the Go Fish bar showing some uncertainty from investors as it tried to break above these pattern highs as the price moved mostly sideways. But the support, importantly, was found by the oscillator at the zero line, and then that led to renewed momentum in the direction of this Go trend, and we've been moving higher ever since. There is some resistance over here, some overhead supply, but we're going to look to see how much further Coca-Cola can go.
Absolutely. All right, let's take a look back at the consumer sector, excuse me, the communications sector,
Yeah.
XLC. And if we look to the industry subgroups that are outperforming in that relative strength heat.
So here's oh wait, sorry, that's there we go. So this is the communications sector subgroup, and we can see very clearly that there's one sub-industry group that's driving that outperformance.
Absolutely. Internet stocks leading the day. And so when we drill into that group, we're going to see names like Baidu and Tencent, Meta, Google. Why don't we pull up a chart of Baidu real quick?
Absolutely.
Just for a change.
Yeah, right. One of the most heavily traded internet stocks, but
yes,
we've been, yeah. So a interesting chart. We saw some weakness as price moved mostly sideways. You can see that it's generally been in a go trend since the end of last year. We saw the oscillator testing the zero line and then break out of a max squeeze, which led to some significant gains. But then we've been moving mostly sideways. The oscillator broke below zero. Perhaps people took some profits here on that kind of information. But then we got a little bit of a no-go come in as the oscillator mostly stayed below zero. Now we've got back above zero, go trend back in place, testing zero again from above. So this is a setup where you might want to set some tight stops and look to participate if we find support at the zero line, and we would then expect price to mount an attack on these prior highs. That's going to be interesting if we do indeed find that support here.
You know, I think if we just pause here for a second and think about the tenets of trend following investors, there are a lot of things that are very simple to say and very difficult to do in practice, right? If your trading rules suggest that Baidu was a good trending security in December of 2022, and you got in, certainly you would be stopped out when that reaches a no-go trend, right? We don't know what the right side of the chart holds. And so we want to use risk management discipline to our advantage, right? We don't want to hold things through no-go trends. But when it resumes, right, that's sort of a bear trap, if you will, gets everybody out and then resumes that upward trend. Buying back into a stock that you recently owned might feel uncomfortable, right? You just sold it. How can you buy it again? Right. But for trend followers, that's exactly the practice that they have to execute. They have to get past their own personal ego or human emotions and just follow the trading rules. Right. So this is a great example where you may have been stopped out in that first no-go bar, but to re-enter a trade on Baidu makes perfect sense when the go trend resumes and we're back above zero on the oscillator. We got positive momentum, and so right here, what we're seeing is neutrality. We're holding the zero line, just beginning the first stages of a go-no-go squeeze. But trading the direction of that break would also fit within those trading rules. Yeah, it's just something to consider, you know.
And I think important to note also that yes, you would have got stopped out, but that would have been at a profit, right? That was a winning trade that you were in. But what people struggle with is buying at higher prices. And that's, so, we always talk about it, you and I, but also other friends of ours in the industry, that technical analysis is buy high, sell higher, right? Correct. It's not really buy low, sell high. And we all get sort of trapped into thinking that way. But the most statistically robust strategies that we find are momentum strategies, when you are trying to find securities that are outperforming. So you're going to be buying a little higher than the absolute bottom. So buying back in is, if we can keep it in that perspective, is a very similar idea. You're buying into a trend at higher prices that could well go higher. So that's okay.
Absolutely. And do you want to bring up one last chart today?
Yeah.
Let's take a look at Meta,
Sure.
a hometown favorite.
Yeah.
Family used to be in the Bay Area. And look at that Go trend.
Yeah, I've loved this chart for months now because we saw we just saw everything play out the way you'd like on a technical chart. We saw a no-go trend in place. We saw oscillated below zero, finding resistance over and over again as it should, and then it doesn't. So now you're saying, okay, perhaps this no-go trend is in trouble, and then we see some amber bars. We see it fill the gap. All of these technical foundational concepts, and then finally we see it roll into go colors, and now we're finding support at the zero line. We see a max go-no-go squeeze, and it breaks out into positive territory, gives us go trend continuation. That was sort of the area we were first talking about Meta several months ago, and then we saw a really solid run and a gap higher, and now our eyes turn to this gap to see, does this gap hold as support? We saw a little brief foray into negative territory, which was a concern, but then quickly regained positive territory. And these multiple go trend continuation icons, these green circles, are what we were talking about most recently, as we then thought we'd attack this prior high, and we've moved higher. So a really nice chart because it sees all of these foundational principles of technical analysis playing out in a go-no-go chart.
Brilliant. Thank you, Alex, for spending time today. Thank you all for watching the GoNoGo show here on StockCharts TV every Thursday afternoon at 3:30 Eastern. We invite you all to join us next week on April 19th for a full hour GoNoGo educational session at the Wealth 365 Online Summit. And hopefully we'll see you in New York City at the CMT's 50th Anniversary Symposium as well. Take care. Be safe.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.